Welcome to the Payments Trilogue, where three seasoned professionals discuss payments and more for Europe and beyond.
Hello, my name is Michael Salmony, and Javier and Ralph and I would like to welcome you to another episode of the Payments Trilogue, where we want to talk about agentic commerce. And we're very privileged to have long-standing friends, Chris Jones, who knows everything about payments, especially in the merchants and card space. I don't know anybody who knows more about this topic than him. And he's now pivoted and is now talking about agentic commerce. So maybe, Chris, you can tell us a little bit about you, about PSE, and what made you suddenly go into this agentic topic, having been so happy with cards.
So first of all, Michael, Ralph, Javier, thanks very much for inviting me along this morning. It's a genuine privilege to talk to all of you today. Yes, I'm Chris Jones. I'm the managing director at a firm called PSE Consulting. We've been around about 30 years. I've had the joy of being in the payments industry for about 20 of those 30 years. As you said in your introduction, we spend most of our time looking at the payment acceptance world, not necessarily just in cards. We also cover open banking, wallets, the kind of broad spectrum of the payment acceptance world. We spend a lot of our time working out how to make these things work better. And whilst we spend a good chunk of that time looking at the current rails and the current products, from Apple Pay to Wero, we also spend our time looking out on the horizon at new things that are coming down the tracks. And as I'm sure you'll be aware, there's been a lot of excitement around agentic commerce. And as a consequence of the interest that our customers, particularly big merchants, but also schemes and acquirers and processors, have expressed in agentic commerce, we've spent some time diving down into the detail of how it's actually going to work. So it's moving beyond the hype, the PR that's out there, and most people tend to discuss, down to the practicalities of how a consumer will actually take something that works in their pocket as a payment mechanism and use it in an agentic context to make a purchase from a merchant. So I look forward to discussing all these topics with you this morning.
I mean, that sounds great. Before we delve into how this will actually work, because there are lots of really interesting questions, like sort of, does the agent get a wallet with some of your money, or can it autonomously access your bank account and all that? I'd just like to get your feeling. Do you think consumers are actually ready to do agentic commerce, to sort of just click on an agent and say, you buy me my flight ticket, and let it all happen?
So, the payments industry, like any industry, has lots of waves of innovation. And some of those waves never really crash. I don't know, I'd cite maybe voice commerce as something that people got very excited about when Amazon launched Alexa and Google had its home product, etc. That's never really kind of caught on. Stable coins, etc., always seem to sort of be on the horizon. I think the difference here is that agentic commerce is something that consumers seem quite comfortable with, and they're already using the mechanisms for research, whether that's about holidays or health or whatever it may be. Many of those journeys can result in a shopping outcome. And certainly if you go to Google today, they're already beginning to merge traditional search and agentic search. And then there's obviously specialist platforms that have been amazingly successful, OpenAI, Anthropic, etc. So there's very strong consumer demand in the platform of asking questions of an LLM who acts on your behalf to go out and find information. We've done direct consumer research with customers actually just before Christmas about whether they felt comfortable in asking an agent to make a purchase on their behalf. And the amazing thing is that if you ask customers who are already shopping online and they are already using agents to ask questions about a myriad of topics, including shopping. A very substantial proportion, 80% plus, said they were happy for that agent to make a purchase on their behalf. Now, we didn't go down into the detail of how that purchase may work, exactly to your point about do I give separate credentials to that agent? How are they making that purchase? What goes wrong? But the general principle, consumers feel very, very comfortable with. And in actual fact, if you look at previous forays into this space, Google Shopping, the idea of you typing in a search request and it coming up with items that you could purchase is very close to the way in which consumers have been browsing the internet for some time. So it's not a substantial leap from where consumers were, say, 3 years ago.
But that's quite a conservative interpretation of agentic commerce, if I may say so, right? It just means that it's basically Skyscanner and they push the button themselves. There's a more aggressive version which says my agent negotiates with 5 other agents and they all come up with different options, and there may be a rail journey or it may be a part flight, and maybe I can afford business if I can use some miles, and there's sort of heavy negotiation in a multi-agent scenario. And then they have to make a decision in the next 5 seconds, otherwise the configuration changes, and overnight it will make this booking. That's a lot more than just a Skyscanner plus an automated confirmation.
Definitely. So there's a continuum. The way in which we tend to think about agentic commerce is that the end point is a situation where you've described, where agents genuinely have autonomy. And autonomous agents acting on behalf of the buyer and the seller come together to represent each of those parties, and they negotiate directly with the agency and the autonomy to complete that transaction with no human in the loop. So that's at the end of the journey, but we're some way off that yet. Mm-hmm. So what we're starting to do now is to build the rails that will get us there. And the best analogy that we've come across is the idea of the self-driving car. So self-driving car has been much discussed. You need only go and look back at, I think, Arnold Schwarzenegger in Total Recall. He gets into a self-driving car in the, I think whenever the film came out in the early 90s. So, but self-driving cars you don't see many of on the streets. You just see them over in the US. I have seen them outside our window here in London. They're going out, but there's definitely 2 people, one sitting behind the wheel and another engineer monitoring what's going on. So those self-driving cars, that idea of autonomy is still not here yet. But what we do have is an assisted journey in our cars. Mm-hmm. There's, the reversing beeper, there's the camera, there's things that will look at other items on the road. So I think we should see it as this continuum. Mm-hmm. And it's important to look at these early steps that will determine where we go, who are the important players that will dominate that landscape, the rules that will be set that will determine how these agents come together. Those are all beginning to be defined now. So it's really important to keep our eye on the technical, commercial, and legal structures within which these early steps are made, because those are the ones that are going to determine how those interactions occur in the future. It's also worth bearing in mind that consumers today, in the way they think about purchasing, there's relatively few use cases where you may give that agency to a third party to carry out that negotiation for you. It's not that there's 0 use cases, but the proportion of total shopping journeys that may eventually end up in that fully autonomous agent-to-agent use case may be a relatively small share of total shopping journeys. Therefore, we need to look at all shopping journeys and say, this is a very interesting use case, but it is only one. And much like the self-driving car, the idea of liability, where because these agents are acting autonomously, they can make mistakes, or they could misinterpret the instructions. There needs to be a very clear set of liability structures that allow the users, whether that be the merchant or the consumer, to seek redress if something goes wrong beyond the instructions that they have provided.
Are
Now,
any solutions emerging on that? I mean, that's the question with autonomous cars for a while. Who is liable?
who is liable? And that's why you see these being run by companies. You don't see them being run by, independent companies. You don't see them being run by, the manufacturers as it stands today. They don't want to take on that liability. Waymo and a whole range of different brands out there who are willing to take on the liability of owning the outcome of the technology that they've invested in. Now, I think the interesting thing will be who takes on the liability for agentic commerce transactions. Will it be something where the agent has their own insurance, and we begin to see moves in that direction? Perplexity has begun to offer this idea of an insurance, of underwriting the interactions that its agents undertake. But ultimately, as far as the payment system is concerned, it's still the consumer that's liable. So today, the default assumption is that if a consumer wants to use an agent, that's absolutely fine, but they're the one that takes on the liability of doing that. If they can lay that off on an agent, and the agent says, that's fine, I establish a relationship with the consumer, then that's probably the simplest model that we'll see. A much more complicated model is one that we see in the self-driving car arena, where there is a new player in the landscape who has a new set of responsibilities, and that in a chargeback scenario or a dispute scenario, they are specifically identified as separate to the consumer, and they take on a new role within the payment system. Now, the challenge with doing that is that the rules for that don't exist today. And I think it much more likely that what will happen is that the relationships that we currently see in a four-cornered or three-cornered payment model will persist, but each user of an agent will have their own relationship with that agent and liability arrangements again with that agent. And it's broadly similar to the kind of payment processing landscape that we've all grown up with, right? If I'm a bank and I choose to outsource my card processing and my bank processing, that's absolutely fine. I can do that. I have arrangements with that processor to do it. But as far as the four-corner model is concerned, that party is a subcontractor to the primary participant, in the bank in this example. So I think it's much more likely for it to land there than seeing a situation where we have an entirely new actor or set of roles within the system. So having said that, there is still plenty of room that the system needs to accommodate in order to be able to for these agents to act properly. So I need to know they're in the system, for starters. So big problem today for most of our merchants is when a customer turns up holding the hand of an agent versus on their own, can be very difficult to differentiate those. And being able to
come in here
Sure.
before we go into that, because still from a consumer's angle, and yeah, I'm definitely very interested on the merchant's angle in a minute, but from the consumer's angle, well, I like the analogy, but we have seen so many times that people are concerned about security, but when push comes to shove, they just do whatever. We have this agentic AI thing has gone through the roof earlier this year. You've probably heard of this CloudPod, MoldPod, OpenClaw thing where everyone started to get their own agent and just ignored all the security issues around it, because I think here, at least in the Western world, I guess, we're somehow used to an assumption or the fact that we're somehow protected. So if something goes wrong, I charge back, or I don't know, I may not be liable, or I can get away with things. So it's not hitting my life, which is maybe where it's different from the self-driving car. If that goes wrong, it may hit my life. So this customers being are, I don't know, maybe falling into a trap of thinking that they are not liable, whilst at least as it's currently being driven by all these big players who will make sure that it's not them being liable, but the customer. And of course, then there is the implication of PSD and PSR and so coming in now as well. So I think it's very complex to find out who is liable.
It is very complex, but ultimately, the big kind of difference between perhaps the self-driving car analogy and the one that I provided is that all of the participants in the payment system are regulated and are required to provide safeguards to their customers around how they use the products and whether they're available for an agentic use case or not. So I think it becomes the responsibility of the representatives of the consumers and of the merchants in the payment system, as in issuers and acquirers, to bear the responsibility of providing the guardrails around the use of those products. Now, the example you gave around Clawbot, it's not a regulated use case. You can go off, you can do what you like, right? Ultimately, that could happen here in Europe as much as it could anywhere else, because these use cases they're very, very new, and luckily there aren't regulations around them, because it should be the forefront of innovation. As soon as we start moving into the payment sphere, not only do you have central banks who worry about the flow of money, you also have the card and payment networks themselves. You have other regulatory bodies like the FCA, etc., all of whom are going to pay pretty close attention to how this thing works. And they can do that not necessarily directly with the systems themselves, but via the networks that they have direct oversight of. And if they see things, use cases that look like they're highly risky, it is incumbent upon them and their actors to take a risk-based approach and to close those use cases down as they emerge, or to provide limits. So I think the challenge here is not so much that we think that the use cases can't be or won't be supported, but the speed with which this thing is occurring. The internet took a long time to emerge in the first place, and then for e-commerce use cases to emerge, and then for the payment rails around those e-commerce use cases to accommodate those ones. I think the difference here is that the pace of change is unbelievably fast. So if you look back in time, it was only in about September or October last year, so 2025, was a customer who turned up holding the hand of an agent a better bet for a merchant to accept, as in they're more likely to convert. So as in a customer I wanted, right? So it's only been like almost not even 6 months that these users are ones that the payment system wants to accept, right? Because they convert better, they spend more. So the horizon of time that we're looking at here is incredibly, incredibly short. And my concern comes from the fact that obviously there's latent consumer demand here. They're definitely interested in, consumers are willing and interested to go out and perhaps do so in ignorance of the complexity and the risks that they are exposed to. But that the oversight systems, the ones we just mentioned, they aren't necessarily set up in order to be able to monitor and respond to the pace of change that we are talking about here. So
yeah, and if I could just a follow-up question there, because we already have seen, I think, a significant change in that time, where like last year it was about agentic AI, was about the agent being a proxy of myself, using my credentials, or when I use an automated browser, I log into my account and then the agent takes over browsing my account and whatever, retrieving information. So I do the login, my credentials. But now I think we're moving towards, and I guess it's good that we're moving towards that, a world where the agent has its own separate identity with own separate credentials, so that the whole thing can be hopefully be managed more granularly.
Yeah, I don't think that's going to happen in the short term. I think we were talking about this earlier on. So the problem is that the pace of change is incredibly fast. And whether they be payment systems or they be commercial entities who are looking to set standards. Google with UCP, Stripe with ACP. If customers want to do this and merchants want to do this, they will run ahead with the current rails and the current arrangements. Right? I think extremely unlikely that anybody will step in and say no. All of these use cases are need to be stamped out. So I think what we need to do is to look at how everybody is nudging this behavior, this purchasing behavior, through the introduction of new standards and use cases. And I think it's these innovative use cases that are really driving it, not the standards. So
Yeah.
I think anybody who is waiting for new rules to determine how consumers and merchants are going to buy from each other is going to get left behind.
Yeah.
That there's a massive latent demand because and you mentioned this earlier on, consumers, if there's utility in it, will use it. And the internet is a complicated place, and an agent presents me with the opportunity to simplify the internet world and make search easier. I think what's really interesting is at the moment, those agents act broadly on my behalf, right? So I pay a subscription to the LLM and they broadly act in my interests. Now, it can still be guided by optimization in various shapes or forms, but there's no commercial incentive for those agents to change the recommendations. The problem is that as these agents scale and the use cases scale, that subscription model is not sufficient to cover the costs of running this LLM infrastructure. The worry is that these agents will seek new revenue streams, and these revenue streams, whether they be advertising or getting involved in the commercial transaction itself or an affiliate model, there's a number of different models that they could explore, that begins to erode the trust that customers have in this agentic world in which we're all interested. And I think it's really interesting to believe that you could have an agent who has genuine insight into you and me, who sees my bank balance, who understands my mortgages and investments, who understands my health, who has an enormous amount of insight on me and can be my representative. Now, that world will never exist if I believe that data is going to be used improperly in some shape or form. I'm not going to share that. And all of the upside that could come from having a genuinely insightful and helpful agent may evaporate. And it's this idea of enshittification, right, which you may be familiar with. The concern is that we've seen this play out in lots of other platforms. The worry is that it will arrive, much like everything else in the agentic world, really early, right, and very, very quickly, and that customers' involvement in this new agentic world will be stunted as a consequence. Now, I don't think this is something that regulation should get involved in. It's a natural evolution of, of scale effects and the economics that come along with it. But I think it'll be really interesting. I think the agents that will be successful will be those that tread that very narrow path between building consumer trust and the willingness for customers to share information and use them as a central part of their lives, whilst at the same time having an economic model that allows them to persist in the medium to long term. And I don't think anybody can look into the crystal ball and be able to tell you exactly what that commercial model looks like. But I don't think it's something that looks like we have in the past, right? The advertising-led model that drove social media and search, I don't think is consistent with an agentic world where consumers have genuine trust in the outcome. So we may have to explore new commercial models.
But I agree in most of what you have said, except in one detail, which is that legislators will not get involved. They will get involved. I was going to ask you about the economic model, the underlying economic model, how would it look like? And what you are telling us is that it will evolve. Nobody knows why. But that it's what also happened with liabilities. Years ago, frauds and scams were understood in a manner, and by evolution, we have come to understand them in a different manner. So legislators have had to get involved and regulate about how to deal with fraud and scams and all that. I guess that this will happen in the same way, in the meaning that this is also a dynamic process. So it will depend on the current circumstances, how each actor has to behave, and I think the legislators will have to pay attention to what is happening with the agents, what is happening with consumers, with customers, citizens at the end. So they will have to deal with the imbalances that are created, trying to rebalance. Other things that they do a smart job and they really rebalance the situation, but that will be their aim and their intention. And I think still we are in a stage that we cannot predict what will happen, neither with the economic model or the liabilities or the reaction of the legislators. So after having understood this, my next question would be, then who has to act next? What are the obstacles, where the obstacles are lying, and who has to remove obstacles so that we have the smoothest process as possible?
Yeah, I think it's a very interesting question. I think one of the reasons that I think agentic commerce is so interesting is that there aren't many obstacles, right? Today, I can log into any one of these LLMs, and I can, carry out a commerce journey. And today, that process is a little bit clunky here in Europe, mainly because of SCA. And even in the US, it's not a ubiquitous experience where I can stay within that agent and make a purchase. It's from a significant subset of merchants and and industries. So it's still really early doors. But I think what's very interesting, and the reason it's going to take off, is that there are very few of these barriers. Some of the barriers are established by regulation. We've mentioned SCA. And Stripe's ACP product needs to adapt to be able to accommodate an SCA journey. The way that Google's UCP product gets around some of these challenges is by using pre-stored credentials that exist in wallets like Google Pay predominantly initially, but then could be other wallets where the authentication journey is solved by calling out to that wallet, and that wallet then authenticates you and you get the response back, as opposed to going through the normal four-party model. So I think the pressures behind this are sufficiently great that those edge those kind of challenges will be overcome. There's a lot of commercial incentive for actors in the landscape, whether they be payment processors or search engine providers or LLM providers, to find solutions to these problems. I think there's enough appetite from consumers to be able to experiment. And I think the problem that consumers have with that experimentation is that the downside risk is relatively substantial. It's not as bad as getting into a self-driving car and it crashing, obviously. But if something goes wrong and I lose £5,000, that's a substantial thing that I have to go out and resolve, right? The chargeback processes or refund processes, they're not simple things, particularly if there's these new actors out there. Merchants, we talked about this just a moment ago, merchants see that agentic customers, they convert better and they spend more.
Okay, now, you've said that a couple of times now. Can I just quickly interrupt you on that? Because I'm also seeing some merchants, for example, Amazon, who say, I'm actually going to block agents. I want to remain the interface to my customers. So not every merchant, I think, sees it the way that this is a huge benefit.
Or perhaps they do, and that's why they're carrying out the blocking. So the problem comes that, from a consumer use perspective, what agents do is they aggregate the internet. It provides me one UX through which I can search for buying a house, my healthcare needs, and buying my weekly shop. Now, roughly the rule of thumb is 50% of e-com is associated with marketplaces. And the reason being that those marketplaces are aggregators. They're aggregators of food for delivery, or hotels and flights for holidays, or, general stuff for home in the case of Amazon, which you mentioned. There is a very interesting, outstanding question about the role of a marketplace in an agentic world. If I can go to my agent and I can carry out these transactions in one place, do I need a marketplace or not? And this is why you see Amazon saying what they have. It's interesting as a counterfactual that Booking.com is more than happy to open up its platform for agents to search and book in. Now, they do that, though, only for part of what they provide. So they provide the catalog. But what they don't do is release their Genius points, their loyalty scheme, and they don't release the reviews. Okay, so what they say is you need to come to Booking.com in order to be able to get that value add that comes from having this platform with lots of buyers and sellers. And this is the thing that I've spent 20 years building up together. But it's still a question that we don't know. What will happen? And there's some genuine concerns that merchants have that are reciprocal to the ones that consumers may have around fraud and trust and all of those good things. As I said, they don't know when an agent is involved. They don't know. It's very difficult to differentiate between a good agent and a bad agent. When an agent turns up, it looks like a bot. And historically, a bot is a bad thing to have on my website. So I've got lots of things like Cloudflare that have been put in place to keep those bots away. But these are good bots. And so now I need to kind of let the good ones in, but keep the bad ones out. So, questions of trust and identity and all of those good things that have been part and parcel of the payments world for a long time, they need to move into the agentic world. And to Ralph's point earlier on that, customers are going out and doing these things kind of willy-nilly. I think the agentic world needs to begin to act in perhaps a more responsible way. Now, I can get onto my my LLM with very, very little security, and that LLM can see a lot of information about me. So there's the data kind of privacy questions about if somebody were to hack into my account, what they could see. But there's also the payment credentials questions that if I store my payment credentials with with that LLM, those payment credentials could be used far and wide. Okay, we have SCA here in Europe, but that agent is not going to discriminate between a one-leg-in transaction in Europe, outside Europe, versus a two-leg transaction here in Europe, right? So I think, recognizing that this LLM to consumer relationship is akin to a payment relationship that needs to have one-time passwords and SCA and all of those other good things that we've come to expect from, not just our banks, but I now get that on Klarna, I get it on Apple Pay, I get it on Google Pay. The wallets, right, also apply a lot more security to how customers log on, etc. So, we've come to expect and trust that banks will provide safeguards. I think, in order to build the trust that we were talking about earlier on that consumers have in these agents, then we also need to make sure that we know who's logged on, and it also addresses the liability and questions that we were discussing. So were you logged on at the time?
The key thing to do. I mean, we're gradually running out of time, but maybe we should spend a moment on this because it's one of Ralph's favorite bugbears. These agents can access your bank and just impersonate me and go all over my online banking, whereas his poor fintechs all have to go through regulated APIs and that doesn't seem quite a level playing field, and also doesn't seem quite secure.
Yes. And can I add on, because also what Javier said earlier with regulation will come in, because I've spoken to quite some regulators on the subject, and the trick is, and exactly relating to what Chris just said, these are acting as a proxy of the customer. And the one thing our regulations do not regulate is the customers, behavior. We are regulating the service providers, the banks, everyone, but we are not regulating the customer, and we shouldn't, of course. But therefore, we can also not just easily regulate a proxy of the customer.
Yeah, and you know, the reason that PSD2 exists is because there were proxies who were acting on behalf of customers and scraping bank account details in certain European markets.
But they were service providers, so they're providing a service, and that is
but at
different.
the time, prior to the introduction of all of these rules, they were not, right? These were not regulated entities. And the reason that this thing exists, you know, that all of the TPPs and all of the other Europe is because of the role of these actors. Now, how long did it take for these rules not only to get defined, but then implemented and then enforced? You know, we're talking shares of decades here. Now, we've just talked about how rapidly this thing has taken off in the last 6 months. Regulation will tidy up afterwards. It cannot be the thing that promotes certain use cases over others. It's too slow and blunt a mechanism. So there will have to be other actors in the landscape. I think notably the people that run the payment systems themselves, who are going to need to step in and take a role. Also, the LLMs themselves are going to need to take on some responsibility, because if they want to build that trust with customers, then they need to make sure that they protect those customers, whether they're regulated or not. So I think, again, it's this balance between commercial growth and interest and trust and reputation. I think the concern, perhaps particularly from a kind of sovereignty point of view, is that we're not talking here about European actors. We're talking about mainly US actors. And all of the kind of concerns that exist in the payments world about control and regulation and all of those things are broadly based on those entities being based here in Europe. So there's an additional challenge, which is most of the innovation that's occurring is happening elsewhere with entities who A, are not regulated, and B, aren't really based here in Europe. So, you know, goodness knows how all of these things will come together. But I think the challenge here is that the pace of change is so incredibly quick. The demand of the end users, the merchants and the consumers, to reduce friction is considerable, and that will drive the change, and change will come from actors which best meet those needs. And I think we'll see, the entities that run the payment systems playing catch up, but probably, not too far behind the curve. The regulators then sitting behind them, who will also begin to understand the outcomes and begin to change them. But it's going to be very much, kind of from the bottom up, with the regulators tidying up at the end, as should be the case, as opposed to something where any of these actors are going to wait for the green light from the regulator and the new set of identities and rules and all of those other things.
Peter, Chris, I could agree with you that there might not be big obstacles, but as you are speaking, I'm noting that there are a lot of challenges and a lot of remaining friction to be solved. I would say that it is due to the fact that it's not only liabilities which made me moving, but also profitability. I think that all those frictions come from the fact that those who benefit are not willing to share with those who are taking the liabilities, and that this will be the battle: who's winning the prices of the agentic commerce and who has to pay for that. And in that sense, would you think that there should be some kind, if not regulation, because this will come late and badly, but some kind of arbitrage, some kind of forum in which everyone can express their interests and try to align those interests? Is there any body,
there
global body
is,
that
right?
could really cast some light on this?
They're commercial entities that are coming together, right? I've mentioned Google and Stripe as the examples, right? They're bringing these entities together. These are not governmental bodies. They're not interbank bodies. They're not bodies that are focused on anything apart from trying to bring these two parties together that want to use these agentic rails. So yes, these things already exist, and they are the forum within which discussions are occurring. I think to your question on everybody needs to recognize the liability that they take on as part of these transactions, and there needs to be a commercial model that covers those liabilities. Definitely, I think the challenge here is that the cards world is built for this. Right? It's built for complex use cases. It's built for a use case where I give agency to somebody else, right? The airline industry's had this for a long time, right? And Amadeus and very successful European businesses have built their whole commercial models on the fact that the customer doesn't actually make the purchase when they book the flight, right? That happens at some point later on using the credentials that they've shared. So the cards world, and particularly the wallets world that sits on top of the cards world, most notably Google and Apple Pay. Perhaps historically I would have included PayPal in that as well, but it's got its own challenges. These are supremely well placed to be able to respond to, in a trusted world, the use cases that we're talking about. Buy now, pay later, also well placed. Interesting that the announcements made relatively recently by Stripe to expand their use cases moved from cards, and the next stopping point was buy now, pay later. One of the big problems that we have with open banking is that it's not very well suited to these use cases, these extra parties, these complex liability structures, the fact that I'm going to give autonomy to an agent where there needs to be structures that allow me to unwind these transactions if something goes wrong. So I think one of the challenges that particularly that European initiative to promote open banking, which has had mixed success, but has been generally, seen lots of transaction volume or growth. How does that world and the world of that Wero is emerging into, how does it allow for the fact that it is in the Wero's case, a nascent payment set of rails, and it's having to deal with all of these immensely complicated use cases that many other payment systems are struggling with, and it has to kind of meet from day one.
I'm tempted to spend another hour with you, Chris. This is such a fascinating topic, but I fear our time is over. As everything with AI, it is both simultaneously absolutely fascinating and terrifying. I mean, the fascination is amazing, all the new possibilities. I use agents and LLMs all the time now, and I can't wait for this to sort of become more. But it's also terrifying if they start to take control, if they start getting sponsored by Google and Facebook and make recommendations based on motivations that may not be in my interest. And the security stuff we've touched on. So thanks very much for shedding a huge light on that. There's plenty more we could talk about. One thing we didn't touch about, for example, was even B2B agents, which I actually think may even be bigger than the consumer agents we only talked about. Already in stablecoins, we see that most of stablecoins are traded between institutions and bots. And so there's a lot of sort of B2B agent stuff to think about. But I think that's probably enough to thinking about for today. So thank you very much, Chris and Javier and Ralph, and for this really enlightening discussion, which I'm sure we will revisit again. And thank you to everybody for watching, and hope you found it as enlightening as I think we all did. Thank you.
Thank you.
Thank you, Chris.
Many thanks for watching and listening. We hope you enjoyed this episode. Looking forward to seeing you again next time.